All right, everybody, welcome into Tax Talk with yours truly, Natasha Barella, the Money Nista. Joining us today is Juwan Maurice. He is the managing partner of Equity Tax and Accounting, and we're going to talk about why you need a new CPA. Five reasons out of the many reasons that you might need a new CPA. And so we're going to start off with Juwan, but first I just want to open up by saying your CPA is a certified public accountant. Accountancy is a huge umbrella, but that does not mean this person has a niche in tax. Okay, you have CPAs that are controllers, you have CPAs that are, are managing accounts payable, accounts receivable. A CPA could just be simply a preparer. They're good on the input side. And so I want to open that and say your CPA is not necessarily a bad person. They just may not know the tax code.
Right.
Accountancy is a huge umbrella. Money's complex. It has a
Yeah.
lot of movements. Okay.
Yeah.
So with that being said, I'm gonna take it to Jawan so he can talk about Section 179 vehicles, right? You're
Yes.
expensing your vehicles because we need to talk about what your CPA is not telling you, and he's gonna talk about record keeping. So
Yes.
Jawan, go ahead and let us know about your firm and yourself, and take it away.
Absolutely. Absolutely. So, as Natasha stated, Juwan here with Equity Tax and Accounting. We're based out of the greater Philadelphia area, South Jersey. We've been here for a little while now. And we tend to focus more so on real estate investors, trucking clients, things like that. But we do service individual clients as well. And yeah, I just happened to jump into tax and accounting a couple years ago. It just was one of those things that I kind of just fell into after doing sales and things like that. But yeah, so let's jump into it. Section 179. It's often talked about. Everyone wants to know how to write off their G-Wagon or their Range Rover, whatever the case may
They
be.
get real wide-eyed, right? They get real wide-eyed.
It's really it's kind of been a booming topic as of the last couple of years, which I think is pretty cool that people are interested in taxes for
When
one
we
thing.
had to lure them in with the vehicles, so
So it's pretty cool. But so Section 179 essentially allows you to immediately take a tax deduction in the year that you purchase that piece of equipment. So this could be your business machinery, it could be a car, it could be a truck, it could be a computer, a laptop, whatever the case may be. So you're able to take this particular item that you purchase for your business, let's say it's 100% business use, you can take that full deduction in the current year. So let's say you purchase a G-Wagon, it's $200,000. Or matter of fact, let's say a pickup truck. Let's keep it easy. You purchase a pickup
now
truck.
there are weight restrictions, right?
There are. There are weight restrictions. So it's very important for you to keep that into consideration. So for Section 179, it has to be 6,000 pounds. So about
Or
6,000
over.
pounds or over.
Right.
Or
And
over.
there's very few vehicles that kind of meet that requirement, right?
Yes, yes.
That's
So
why we
this,
keep hearing about the G-Wagon because it's one of those vehicles that meets and a lot of standard vehicles they don't meet it doesn't meet the 6,000. So can you take a deduction for under 6,000 pounds? Is there
um, yeah, you can. So it won't be Section 179, but it'll be like bonus depreciation. So you could take
Gotcha.
that.
Okay, so let's
Um,
let's talk
yeah,
about the pitfalls of the G-Wagon and what people don't realize, right? I need to talk about it because I don't think people
yeah.
understand.
Yeah. I mean, it sounds cool. Like I think it's pretty cool. Like I said, because it's like it's one of those things where it really piques your interest. It's like bonus depreciation, like for real estate or real estate professional status. It's really cool. So one of the pitfalls that I see often is um, it's going to be depreciation recapture. So in the case where you purchase this truck, it's $100,000. You depreciate the full 100% of that truck this year. 2 years down the road, you decide to sell that truck, let's say for 60,000. Your basis is zero, and now you have a $60,000 gain that you have to pay taxes on. So that usually catches people by surprise on the back end when it comes to the G wagon or a pickup truck, or whatever that case may be. So
Okay, so can we talk about the actual requirements? Because I know I'm a former examiner. For those of you who don't know, I'm 19 years in audit, accounting, and tax, 13 in the Internal Revenue Service. I think what people don't realize when you are purchasing these cars is that you have to have a car available for personal use outside of this vehicle, right?
yes,
The vehicle has to be used, what, over 50% of the
over
time for
50%. Yep.
business, right?
Yep.
And so that will lead us into record keeping. But I think one of the pitfalls is that people don't realize you can't just go buy it and take the 100% expense. It doesn't work like that, right? Yeah, it
Yeah.
doesn't work like that. You have to, you have the burden of proof, right?
Yes.
As a business owner, you have to be able to prove that this is in fact over 50%
Mm-hmm.
in business. And that's the general rule for a lot of
Right.
assets that get bonus depreciation, or in other words, for those of you who don't understand, it's just a fancy
Mm-hmm.
word for expensing instead of
Right.
allocating a cost per year.
Right.
Normally with an asset, you allocate a cost per year as an
Mm-hmm.
expense. With Section 179, you get to take the expense up front.
Right.
It's not the full cost of the vehicle, is it?
Yeah, it's the full cost. So
Full
if you
cost.
purchase that vehicle, it's 100,000, and you say, hey, I want a Section 179, it's full cost. If
Mhm.
it qualifies, yeah, if it
If it
qualifies,
qualifies, right? And
yeah,
so a
you're
lot
good to
of
go.
times people don't even have the profit, right? Because if you
Yes.
have negative profits, you can't write that off, right?
No.
No,
No.
right?
And even if you are profitable, like it for a lot of times too, that's another pitfall I'll mention is that oftentimes the deduction for the vehicle doesn't outweigh the benefit, right? So depending on your situation, if you take that deduction and you can't maintain the payments, your business can't maintain the payments, the maintenance, the repairs, like it's just not worth it. You could have just taken that money instead of putting it on a G Wagon, you could have put it towards systems, it could have gone towards personnel, you know,
Advertising. You know, I'm
advertising,
big on
or
advertising. A lot of times your business is failing because you don't let people know. People are afraid to like swipe for some ads. I don't know why. But yeah, I noticed I don't like to talk about vehicle, the Section 179 vehicle, because it unnecessarily widens people's eyes and it makes
yeah,
them feel like you can do things that you can't. You do have to be a legitimate business. You do.
right.
You have to have the profits, and it has to be, what do we call, ordinary and
And
necessary.
necessary. On top of that, yeah, on
Right.
top of that,
Ordinary
on top of that.
necessary. So, and you have to have a real business. You can't just not have records, open up an
Mhm.
LLC and go get a G Wagon.
Yeah, that's insane.
You're gonna,
That's
it's like the PPP fraud, right? I have no
insane.
business, but I'm getting some money for said business and I don't have
Right,
anybody on payroll.
right.
So,
And we
I'm
see and you see the outcome of that. And
right,
we're seeing the outcome of that now in hindsight. But in 2020, you couldn't tell anyone anything.
right. So,
Everyone, matter of fact, people, it's crazy because during that time, no one actually came to their actual professional, their tax person. They just went and did it. And then on the back end, they're letting you know, hey, I got this money. And I'm like, you don't even have any employees. What? You're
right,
not even an
right,
employee of your own business. So
right. So, that's a good point. I never realized people would go ahead and do it and not consult their tax professional, so they're
no,
in trouble. Because a tax
no.
professional will let you know, a real tax advisor will let you
Yes.
know you don't have a business, ma'am or sir. You
Right.
cannot do this. You're going to get in trouble, right? The
Yeah.
government will always find a way to come get you.
Oh yeah.
Even if
Oh
there's
yeah.
no legislation in place at that moment, please be advised.
Mm-hmm.
And Jawan says all the time, I'm always conservative, but I'm effective, right?
Yeah.
I'm
Absolutely.
effective. I tell the truth. I'm effective. They will find a way to come get you. So,
Mm-hmm.
yeah,
And
you can't
you
have no
know,
business and get these deductions. So put
yeah.
the idea away for your car, okay?
Right. And
And you
that's the
don't need
last thing
it,
you should be worried about.
right?
We're in business to serve people.
Drive your
That was my other
Camry,
point.
drive your Camry, right? Until you get
Yeah.
the profits to sustain yourself, right?
Mm-hmm.
And to justify the purchase. Again,
Right.
I'm always teaching from the eyes of an examiner, right?
Right.
And I've had the privilege of not only being an accounting professional, a tax professional, but
Mhm.
being the examiner, right?
Right. Yeah.
I know what we're gonna look at. We're gonna be like,
Right.
this doesn't even make sense, right?
Exactly. Yeah.
Your
Getting
G
thrown out.
wagon, the G wagon doesn't even make sense for your business, right?
Mm-hmm.
Like it just doesn't. So it has to be ordinary and necessary, and which means it has to make sense, right? And it has
Right.
to be reasonable, right?
On top of that.
Right,
Yeah.
reasonable. And people don't know the definition of reasonable. That's not
For
reasonable.
sure.
You made 50 grand and you want to write off $100,000 car. You can't do that.
If you even get approved for it. Like that's the thing
Right,
too.
right.
Like you're not
If
even
you
gonna
get
get
approved, right,
approved
you
for it.
can't do that.
So
So yeah. So let's lead that into record keeping, Jawan, and
mhm.
you would know better than anybody because I stopped preparing a long time ago. I
Yeah.
prepare people for their tax liability, but you
Hmm.
actually prepare so you get the brunt of business owners and their
Yeah.
record keeping.
Yes, yes. So yeah, record keeping, bookkeeping falls in the same category. So that's honestly before like the PPP came out and COVID happened and things like that, people were kind of just doing things on their own. They're kind of just doing it,
Winging
maybe
it.
winging it, and it's like one of those things where people kind of got caught off guard once that happened, the pandemic happened,
And they
and
had to
now
actually
everyone's
submit.
scrambling.
Yeah.
They're
Yeah.
scrambling. They're like, I need this done. I need this done. And we're like, guys, we can't just all of a sudden, we have current clients that we're working on. We can't just all of a sudden make you a priority. This should have been done. We can't go back and do 2 years of
Thank you for
business
that,
books.
Jawan. Thank you.
Come on.
Thank you for that.
It's a first come, first serve situation. And plus, we prioritize those who've already been a part of the system, doing it the right way.
That's
So
right. That's right.
record keeping
Nobody
is,
wants to clean up somebody else's mess, people.
yeah, yeah. Even
That's
if it's your
why,
own,
right. Nobody wants to
you
clean up.
know?
And that's why I teach bookkeeping and people, or record keeping, and people are like, yeah, 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 but can I do this? And I'm like, I'm talking to you as a former examiner, right? 19,
Yep.
almost 2 decades in the business.
Right.
Let's not get ahead of ourselves. You need to have some books and records, because the first thing an examiner is going to ask for is your books and records.
Absolutely.
Let's not even talk about deductions. I need to see those books and records, because that's going to tell me if you're truly a business, right?
Yeah, it's to separate you from a hobby.
Right. And if someone hands you 18 credit card statements from 18 different credit cards, what is your response, Joel? What is your response?
Not going through that. You're not going through that.
Right. So your preparer is not going through that. Y'all are hearing it, right? Your preparer is not going to, and your examiner certainly isn't going through that, because the burden of proof is on you.
Right.
Right.
And when
I'm
they
an
ask
examiner.
for,
My job is not to bookkeep for you. If you don't put it together for me where I can easily find it, you've got to tell me the story, right? Otherwise, I'm going to make up a story with what I see. And whatever story you tell me has to match that documentation. I'm not going through 3 different personal credit card statements for the year. I'm not doing that. If I'm an examiner, I'm stripping your return. And you're going to learn your lesson. And you're going to fight at the next level, right? You're going to have to, and then you're going to hire, right, a tax professional.
Exactly.
And you're really going to pay for that.
Yeah.
Your books
and that's usually, and honestly, that was probably one of the biggest things I noticed when people realize that they need 2 years of tax returns or 2 years of bookkeeping done, and they realize the cost or the investment.
Right. They don't put the money into their operation. So you guys, I think it's really important that we stress solidifying yourself as a business.
Right.
Stop jumping to deductions like your car and
right.
what the fancy flash you can get. Your business is important. I have several properties, and I have good cash flow. I drive a 12-year-old car. My car is fine.
Yeah.
I just got my oil changed and my alternator. My alternator changed and my battery. Right, that's what charges the battery.
Right. Yeah.
The car's fine. People like, you would think this car was a newer car. I don't pump money into things just because. Right.
Because it can be used more efficiently.
Right. What's more important is my sustainability, what we call ongoing concern in your business, right? Because that's what a lender looks like when you go for a business loan or a real estate loan. They want to know your business's ability to keep going, right?
Exactly.
With the funds that you're using. They want to make sure there's not a going concern, an ongoing concern, meaning these funds, right, for this purchase, right, as your lender, right, if you use these funds, we got to make sure your business is still going to be able to sustain itself.
Yep, exactly.
So when you guys are purchasing these vehicles or you're trying, please remember it is important to make sure that your business looks good on paper first, right? Exactly. Pump the money where it needs to go. Your car, if your Corolla is working, let it work.
Let it go. Yeah.
Let it go. Yeah. It's fine.
Right. And honestly, I'll just tie that right into your financial statements, financial documents. So that's going to be your profit and loss statements, your balance sheets, your cash flow statements. Very, very important. And I think it's one of those things, like, we know we need it. Yep. We know we need it, but it's like, I'll get to it. Yep. I'll get to it. So,
and when you get to it, when you have to, and that's the worst time, because when you contact Jawan or any tax professional, you're at the back of the line.
Yes.
They're not, and they don't have a real moral obligation to put you at the front, because they have clients that they have to tend to that have been doing it right.
Exactly. They've been doing it right.
Right. So your sense of urgency can bite you in the butt later, because you should have been doing it up front. And that's why I say the tax strategies mastermind is more important than just eliminating your tax liability. Part of eliminating and reducing it is record keeping.
Yeah.
Because now you can actually see how your business is doing. It's like, oh, I did my books and records. Wow, I spent a lot Oh wow, I
Meals.
kind of cut back on that,
Right.
right? I can kind of shift the money. Now you start to automatically think like a real
Mhm.
business owner on the
Right.
financial side rather than just the operational side.
Exactly. And that's kind of the downside to it because it's a lot of different aspects that you have to be aware of. Like you said, it's operations, it's going to be the financial side, it's marketing, it's
And so do
sales,
you
it's
do you get business owners that don't really look at their financials? They kind of like just deal with operations and kind of leave the mess to
yeah.
you to
Yeah.
clean up.
Yeah. That's usually the case. Usually they don't want to deal with it or they're kind of afraid of it. They know they've neglected the books for a little while, so they're kind of like, I don't really want to see it, and then they just push it over to you. But you have to be involved because there's so much we can do.
Yep.
You have to be involved to
Right.
see how things are performing. So we like to do like monthly calls, with certain clients. We do monthly calls to kind of see what's going on with the P&L, with the balance sheet,
Right.
and how it's affecting you. Because
Right.
it's easy for us to see the operations, but when you see the numbers, you really know your business. You really know what's going on.
Yeah, yeah,
You
yeah.
know?
That's awesome. And so with that, I'm going to jump into something that's really important that your CPA, isn't telling you. For my real estate investors, for those of you who know me, I focus on reducing and/or eliminating your tax liability
Right.
through business ownership, which record keeping is the foundation.
Yeah, it's everything.
It's everything. It's the
Yeah.
most important thing. And
It's
then
the most neglected.
it's the most neglected. It is. It is. It's the most neglected. You guys are mad at your repairs when they don't know what your business is because you don't know what your business is because you don't keep records.
Exactly.
So, which leads me into into the real estate portion, right? So, I use real estate as a huge heavy hitter in the game.
Right.
It changes
And
things.
actually, I want to say before you even jump into that, I want to say real estate is actually a great hedge for business owners. So a lot of us are business owners, like we own our own company. We might be in trucking, lawn care, whatever business it is. The best place for you to dump the profits, the excess, is real estate. That's where you get all the real. That's what you should be thinking about. I would honestly
Amen.
say, and this is not
Amen.
financial advice. I would say the best move would be business profits to real estate before stocks.
And that's what real wealth builders do. They
Right.
do, right? Real estate is real. It's physical. And even if the market goes up or down, you still have that physical
Yes.
brick and mortar.
Like now.
And we talking about it in investment, right? You still have
Right.
there will always be tenants, right? You
Right.
will have cash flow, and we're going to talk about tax flow right now with real
Hmm.
estate. A
Right.
lot of times your CPA won't tell you about real estate professional status, or they'll give you incomplete information or inaccurate
Right.
information.
Or they just didn't know.
Or
A
and
lot
they
of times
just didn't
I've come
know,
across it. They
right?
don't know.
Or
They've
they
never
don't
heard of
know
it. Yeah.
because they're not what? Tax professionals, right? Real estate professional status recategorizes passive income to active income. And what does that mean? That means any of these losses, because most real estate investors have losses, right? But they're
Right.
not real losses, they're paper losses.
Paper
They
loss,
really
phantom
get their
losses.
cash flow, but on paper for the tax man, because the tax code is designed by the wealthy, right?
Right.
It's a loss, right?
Hmm.
And so they take these losses and they offset their business income,
Hmm.
and they offset their ordinary income, they
Yep.
offset their rental income, and they have no
Retirement income,
retirement income, they have no tax liability.
dividends,
Right.
interest.
Right. So
Mhm.
real estate professional status and what your CPA isn't telling you is that you don't need a license. You don't need a real estate license. I am a real estate professional via IRS standards.
Right.
And that means material and active participation.
Yep.
That
Yep.
has nothing to do with a license. It's very specific.
Hmm.
Over 750 hours dedicated to real estate activities. That
Activities.
could
Yep.
be going with your realtor, looking at properties, right? Viewing
Hmm.
these properties, analyzing the numbers, talking to your lender,
And
submitting
Natasha, I have a
documentation.
question. How about managing your property managers? Does that count?
Oh yeah,
Ah.
managing. Yeah, I was getting to the list, Juwan. I'm trying to go from acquisition to maintenance, right?
Right.
Right, closing, walkthroughs,
Right.
inspections.
Totally
After
get
you
it.
close, getting tenants, screening tenants,
Yep.
right, and getting the leases together. Any
Hmm.
calls that come from your tenants,
Hmm.
lawn care, what do you call it? Snow removal,
Right. Seeking
gutter
quotes.
cleaning, all of that,
Yes. And
every
it
bit
gets
of
you
that.
get there very quickly. The
and you
750
get and you get
very
to,
quickly.
you get to the 750. So it's actually over 750,
Right.
751 plus, right?
Right.
And that's what I hate about the verbiage, right? It's like
Right.
You have to have over 750. So people think all I have to do is meet 750. No, it's actually 751 plus, right?
Right. Right.
Verbiage is important and it's written that way for a reason. And
Exactly.
people don't understand that you get to that 751 easy.
Right.
I had one property with the inspection for the bathroom wasn't legal after I closed, even though it passed inspection.
Right.
That took up 500 hours easily.
Ooh.
One property, right? A lot of people will ask, how many properties do I need for real estate professional status to meet those
Right.
hours? It depends on the property. And
Right. Yeah. The
I have
project.
properties that are smooth sailing. Like I don't hear from anybody. I just get the rent.
Right.
Right. And I pay the mortgage, right? And that is an activity. I receive the rent, I pay the mortgage, right? That is an activity. I document it, right? I document my hours when I collect all my rents and I pay it, right?
Right.
And then the second portion is you have to have more than, keyword, more than 50% of all of your activities related to real estate.
Exactly. Yep.
So all my W-2 people that are full-time,
Right.
there's a way around that. There is a way around that. And you're going to go ahead and click the link in the description to join the free live webinar as well. And Jawan's link, right, to book a consultation call with him is also in the description.
Yep.
But there is a way around that for you to offset your ordinary income. I did it. I am like I said, 19-year veteran, 13 years at the IRS in large business and international division, right? Examining large entities that report 10 million or more gross receipts and assets. So I know a thing or two about taxes, right? I move within the tax code because that's the blueprint for wealth. It is.
Right. It is, yeah.
It is. It's the blueprint for when people say, well, I'm going to do stocks, I'm going to do this. Look at what the tax code says about it.
Right. Along with preservation. Along with preservation, yeah.
Yeah. It's right there. It's laid out. But most people, like you said, they don't want to be bothered. They don't want to read it. You know, they want somebody to do it for them. And that's that's what you guys don't understand. It's actually important for you to actually get involved, right?
Yes.
So real estate professional
I can't stress that enough.
Right. Real estate professional status can save your life. Real estate professional status can be the very reason you're able to leave your job.
Yeah.
I'll repeat myself.
Yeah.
Real estate professional status can be the very reason you're able to leave your 9 to 5. I'm living proof. I'm talking proof, physical proof. I'm here, right? And then the second part, right, is bonus depreciation, which we talked about along with Section 179, right? Bonus depreciation is just a fancy word for bonus expenses.
Which is right. It's
that you don't
acceleration. Yep.
It's depreciation is a fancy word for expense. An expense you don't pay, but you get because you're in business, right? And real estate is a business.
Sure is.
And I'm only talking to my investors, my primary resident homeowners. I'm sorry, we will fight until the deaths. Your property isn't a wealth building asset.
Right.
It isn't.
Yeah.
The Tax Cuts and Jobs Act said we're going to raise the standard deduction and knock out your mortgage interest and property tax, Schedule A. We don't care. You get no more benefit than a renter.
And you know what's crazy?
Don't talk to me about appreciation either.
I'm seeing that a lot. I think that's probably one of the things that's throwing people for a loop right now, especially since 2017, essentially. This has been throwing everyone for a loop because they thought that purchasing their home would provide tax incentives.
No.
But
purchasing investment properties does, right?
Exactly.
And if you listen to the tax code, it's talking to you, it's telling you, right? So with my rental properties, my bonus depreciation, along with my depreciation, it can come out to over $100,000 in the first year. So bonus depreciation is only taken in the first year that your assets placed in service, right? You purchase a rental, you place it in service, right?
Yep.
And then you get what we call bonus depreciation. Now, bonus depreciation creates this huge loss. Again, I don't pay for it. I just get it. It's a phantom loss. And it offsets what? Real income. Because I'm a real estate professional.
Oh, man.
It offsets real business income, retirement income, all this income.
Yes.
It's the reason why you can leave your job.
Right.
You can, if that's really what you wanted to do, right? Now, maintaining investment property is not for the light-hearted.
Right. It has its own challenges.
It has its own challenges, but for the most part, it's freeing. Right. I don't have to report to a 9 to 5. I report to my tenants, but like I said, I have properties that I don't. They just cut the check, direct deposit, and I just pay the mortgage, and that's it. And I get all these write-offs.
Yeah. All these incentives. Yeah.
I
One
essentially
way.
have no tax liability because my bonus depreciation coupled with real estate professional status, which again recategorizes my passive activity to active.
Yes.
It
Yep.
offsets all of my income, not just my rental income. And
Right.
then now, not only my rental income is not taxed, my business income is not taxed, and my cash flow from my rentals pays for my living expense.
Right. So it's a win-win either way you look at it.
It's a win-win. Your CPA, two things. Your CPA doesn't know about it and doesn't care. They make
Not interest. Yeah. That
they
honestly,
make
that's
all
the
their money preparing
yes.
from January to April.
Yes.
They make what, sometimes 400, $300,000 all from January to April,
April. Yeah.
right? And they don't care. They just want to do
That's
the
the
input.
biggest thing.
They just want to
That's
they
the
just want
biggest
to
thing.
input and keep it moving. You're a
Right.
number to them, right?
Right.
Now, and or they do know, but they don't want to get involved because they know that you won't what? Keep records.
Right. Or take action.
Right. You
Or
have to
take action.
right. Take action or keep records, right? They know you
Right.
have rentals. They're preparing your return. They know you have rentals, but they won't tell you about it because you have to I have to keep records for
Mhm.
my real estate profession. Those 751 plus hours, I
Right.
have to keep records. I have to keep track,
Yes.
right?
Yes.
I know we use Reps Tracker and the Tax Strategies Mastermind. Again, I upload all my documentation. A lot of
Mhm.
people, they won't keep records. And this is the
Yeah.
reason why a lot of you are still trying to figure out how to leave your W-2 jobs
Right. They're
with
looking for
your
the hack.
rentals.
Tell them, Natasha. They're looking for the hack,
You're looking,
the free
I'm giving it
game.
to you. I'm giving you $1 billion worth of game for
Right.
99 cents.
Sense. Yes.
Okay. So I mean, this is what it is. You guys are going to work every day because you guys won't take action. You don't want to. You don't want to keep the. It takes me all of 10 minutes to log
Yeah.
something in and
Yeah.
upload the email as proof, or upload the documentation, my closing documentations as proof,
Right.
or to keep a folder. It takes all of
Yeah. I was gonna say that. Yep. Keeping a
right. Keep a
folder.
folder. I use Rep Tracker because we can just
Mhm.
download the report in the portal. Um,
Simple. Yeah.
it's easier, but you can keep an Excel spreadsheet in folders.
Right.
You can document, label, we all know Excel by now,
Right. Right.
right? You can detail the activity, the date, the time, who you spoke
Mhm.
with. You can have the invoice ready in your folder. Documentation is the reason why you guys aren't free,
Right.
financially free. Documentation is the reason why you guys aren't financially free. You guys are
Right.
so worried about, oh, I don't get to deduct anything. We're not the rich, we're not the wealthy.
Right. Yep. Yep.
But
Yep.
you don't want to document.
Right.
I mean, you have a
And
mobile phone, you spend hours scrolling through Instagram and Facebook, but you don't want to take a couple of minutes a
minutes.
day.
Yeah. Yeah. They want all
You
the
don't want to,
benefits without much
yeah, you
work.
don't want to be free.
Yeah.
Like, I'm giving you true game.
Hmm.
Record keeping is documentation/record keeping is where it's at.
Right.
I can't make it
Right.
any more clear. You're hearing straight from a 13-year veteran at the IRS,
Hmm.
19 years total in audit, accounting, and tax. No documentation, no freedom.
Yep.
You need your freedom papers and
There we go.
documentation, right?
There we
That's
go.
that's your freedom papers, documentation. So, thank you, Joanne. Unless you have anything else to add as far as in your experience, what your CPA isn't going to tell you.
Well,
Um,
actually, I was going to say we didn't jump into tax planning versus preparation.
that's a good point.
Tax planning versus tax
You're
preparation.
yes, yes. So
So,
you go ahead, Joanne.
yeah.
Let them have it. Let them have
So
it.
that's our fifth one, tax planning versus tax preparation. So tax preparation essentially is where you're just data entry. As Natasha always mentions, they're just putting in numbers, letting you know after that, they're letting you know, okay, this is what you owe, this is what you have to pay in. Boom,
Or what
you're
you're getting
done.
back.
Or what you're getting back, right? If you're someone who gets something back, that's what you get back. Whereas tax planning is where you're being more proactive and you're trying to figure out what strategies you can put into play to help you further reduce your liability, like Natasha mentions. It could be your real estate professional status, your bonus depreciation, real estate. If you're a business owner, you're probably looking for ways, I'm generating this profit. Where can I put it? Real estate.
Right.
So that's where the key differences between tax preparation and tax planning is going to be in strategy, being a tax strategist or working with a tax strategist as opposed to a tax preparer or
Right.
someone who just
And a
data
lot of you
entry.
think that your preparers are obligated
Right.
to tell you certain. They're not. You hired them to prepare.
Exactly. Yes.
You did not hire them to advise.
Exactly.
right? Because then they would have to issue you a different engagement letter, and that engagement letter is going to be about
Yes.
5 grand for the year,
Yes. Yes. And
and
that's where
sometimes
people
10
get tripped
grand
up. Yeah. Yes. Yes. Easily.
easily.
Easily. And it's worth
So
it. It's worth it.
it is. It is worth it. I mean, I am my own tax strategist, thank God.
Mhm.
If you guys want to learn more about tax strategy and planning, group coaching, and the
Mhm.
tax strategies mastermind with
Yep.
yours truly, we also work with Juwan, who
Mhm.
prepares
Mhm.
and offers bookkeeping if you don't want to do it,
Yes.
but you better do it at least
Right. Right. Right.
every monthly. Know what your numbers are. You cannot be
Yeah.
blind. You can't turn a blind eye. Just click the link below to join.
Mhm.
And I hope to see you guys there because this is serious business. This
Right.
is your way to freedom.
Yes.
This is your way to freedom. Most people don't hit the lottery.
Yeah. Yeah.
Most people don't hit the lottery. So this is your way to freedom. I mean, I
Mhm.
can't make it any more plain. So thank you, Jawan, for joining me, for joining the Tax Strategies Mastermind as a fellow expert,
Yes.
and
Yes.
offering your services. Again, you're gonna click the link below in the
Yes.
description if you want to book a consultation call with Jawan. And I hope to see you in the mastermind. Okay, so you guys take care.
Have a good one.
Bye.